Hi, I'm Louisa Sijabat, a liquidator and bankruptcy trustee. So today's question is, who pays for liquidation if a company doesn't have enough assets to pay for a liquidation? So the answer to this question depends on who's putting the company into liquidation. If the company has no assets, but its directors and shareholders would like to put it into liquidation, the directors and shareholders, or directors or shareholders, or any one director or shareholder, can choose to contribute funds personally to pay for the liquidation of the company. If the company is being put into liquidation by a creditor through the court process, then that creditor typically pays a solicitor and some court filing fees to have the company put into liquidation. Sometimes they will also contribute funds towards the costs of the liquidator. Other times they will not, and the liquidator will take the matter and have a look to see if there's anything recoverable, and if so, the liquidator is entitled to be paid out of the assets of the company in liquidation.